If you don't understand these commercial real estate expenses, then your projections will never add up to what you're looking for. Your net free cash flow gets smaller and smaller every single month if you don't take into account of these major expenses no one's telling you about. My team's done $1.6 billion in transactions over the past few years, and I've seen just about everything under the sun when it comes to real estate and especially commercial real estate. I'm going to show you on a live deal the expenses, what to look for, how to plan it, how to gauge your actual true net free cash flow moving forward to get you better deals as fast as possible. So let's hop into all platforms. As you all know, let's use this as Crexy for a good example here. I'm here in Austin, Texas, where we can help you in all 50 states and 25 different countries. You want help down below, no obligations, link in the description. Have a call me directly. If we don't save you 5 to 6 figures in your next investment, we work for free. So it's a win-win for you. Now, on that point though, I'm going to just find a super random transaction. Let's do exclude prices. And I'm just going to find, let's do multifamily. It's an easy one to kind of gauge with. Most people understand multifamily. Now, a whole video up above that breaks down like the best kind of asset classes to buy if you're a new investor. But multifamily is really easy to get into. So let's see all expenses here. Normally, you have access. This is 9 units, NOI. So when it comes to expenses, and cash flow. I know a lot of first time investors, they think that your NOI, your net operating income, is your cash flow. Unfortunately, it's not. It'd be amazing if it was to invest $1.7 million and get back 117 every single month. This is a 7 cap almost, a little bit low, but every single year. But at the same time, your NOI is just the first step to understanding your cash flow. Now, if I'm looking at the OM here, a lot of times they will tell us, not on this one, okay, well, this actually let's do storage units. I know self storage are pretty big about adding expenses to it. Here's one called Blue Water. 30 days in market. There is no information about anything though. So let's see. So occupancy rate. So this is also an expense right here. Like the lack of people being inside of there tells you that that is an expense. So the 32% of vacant places will actually count against your expenses in a way. Same for economic occupancy. So this is another part of expenses no one tells you about. This means that of these 68 people, 68% of people, 64% of them are not paying. Like, let that sink in. That's a huge expense. Not only the expense of, not receiving payments, but it's also the expense of having to do double locks, in this case for storage units, having to evict them, having to get auctions going in place. All these things cost you money. And a lot of people will see this and just think, oh, okay, like right now, NOI is to say 117 on this transaction, but you have all these back payments not given to you. You have all these things going on. If there is a 7% occupancy rate, that means it's like 230 people are filled. You have about 100 people not in there yet. And of those 230 people, I would say like 180 of them are not paying you. That's a huge, huge loss. So 230, 60 people almost are not even paying the event. So technically, like my occupancy rate in theory is half. I have half people here. So this is kind of really, bad property in that case, which is good for like the goals of, value add, better OpEx, better management. So it's not a bad deal per se. It's just like not run correctly. Now, if I keep going down this list, hopefully it'll show us some kind of expense report. So this is unit mix. Here we go. So here is their T10, not T12. For those who are new to T10, T12, T12, T10 just mean a rolling 12-month period. So this is like the P&L almost for the past 10 months. So what you want to do in this case is I would divide this by 10 and then times it by 12 to find the actual NOI and find the actual numbers. So here you can see here, year one, this is them saying this is what they did. They did the math already for you. So this is 255. This is 2 more months added to this T12 or T10. So your expenses. This is a yearly basis. So we have our advertising for $13,000. We have our computer internet expenses for $3,600. We have property insurance. This is 3.2. We have call centers. This is $7,000. This is about. Now this means what they're doing here is trying to make it as super automated as possible and not as more hands-on, which is also why you see such a high level of not payments going on because they're just like having a whole system there, which is being hit or miss depending on how you do it. Credit card fees, $7,700. Salary, this is a big one here. So salary is $2,000. This is how you know why the discrepancy is so large when it comes down to collecting payments and getting people to have a happy service there. Because no one asks you on site, they get things going. They have a call center, they have ads going down below, they have a management system for $9K a year. They have offsite management for $25,000 a year, which is like, $2K a month. So like, I don't know about you, but not many people are going to be working for $200 a month on the $2K a year, not even $200 a month, like $150 a month, and then another like $2K. So like the management system is really, really low, which is part of the expense. Like when you're looking at expenses, not only are we looking at the expenses of what's happening today, I'm also looking at what's going to happen later on. Like what is the pro forma expenses? What are the evaluations and assumptions that I have in place for the expenses? So I'd probably come in here and increase management, increase, maybe even advertising, because right now they're still lacking, 100 units. What can we do to increase all these things? We have our pest control. We have our repairs and maintenance. This is $10K a year. We have property taxes, which is $14K a year. That's going to be pretty stable. We have utilities, which is $9,000 a year, which seems pretty high for this storage unit. Then down below, you can see the year two projections and so forth. And this is how you can really tell what's happening. So this is a salary is 2K here, and it's 2K here. So nothing's changing, which I think is a fallacy. Like that means that how it's currently run is incorrect because it's not performing at the highest level. And sure, we can increase our NOI by increasing our rents. Up here, they do the same exact thing for insurance and so forth. But at the end of the day, I know that if I don't have better management there, that would be expensive to take account for. So for you guys watching now, just know your expenses will probably change based on when you buy it or invest in this property. All right, so this is all we have for now for expenses. This is pretty much the bulk of it. Now, on top of that, though, there's two more things that you have to take into account because your total EGI, your gross potential income, is going to be breaking down, what we have. So we have vacancies, which is $100,000, which is an expense for us. We have rental income, which is $217. We have total gross income, which is $320 in a perfect world. We have $20K for rental things, insurance, other income, which I think is odd. What's other income even mean? Just to have a breakdown for that for us. And then for the whole year is $255. And for all these expenses here, we have $106,942, so 107, leaving us $148 NOI in a year. Now, if I was doing this math and helping you protect your money, I would say our NOI is probably closer to 110, 115. I'm probably add more ads. I'm gonna add in more management and more salaries, and probably also like benefits. And these benefits also add up. So this is to say, I'm gonna take off $40,000, leave us with $105,000 of a true NOI after said and done. It's a 2.3. So if I have 105, and to do your NOI and cap rates, I have a whole video above that breaks down how to do that. But it would be the NOI divided by the income. So this is 4.5% NOI, a cap rate, I mean, after all said and done. If I bought it as is today and said I'm not going to change anything, if the cash flows from today at 2.3, we have a 6.5.4% cap rate. Now, on top of that, though, there's more expenses. Because the next expense you have in place now is going to be your debt payments, your DSCR. So my debt servicing is probably going to cost us, in this example, let's say we get lucky, we get 25-year term on a storage unit. Normally it's 15 to 20 years, but let's say that the bank we have loves us and they're happy doing that for us. I'm going to do 20% down. I'm going to do 25 years. And that means our monthly debt service is $12,137. So if I times 12, 3 times 12, that's $148,000 a year of debt service. Also, keep in mind that the current NOI is 148. So right there alone, I just found out this deal will lose you money day one before even adding more management, anything else. That, in my mind, is a terrible deal. Like for my clients, you should be making money day one when you buy a property. That way, you never lose. And then from there, when you get more deals and you stabilize the property, you're totally fine. It's an even better asset for you now then too. So for us, that is one expense. One expense is the debt income. Our next expense that most people never take into account is your CapEx. So we have OpEx, which is going to be fixing the occupancy, fixing the property, being better management. But then we have our CapEx. And the CapEx is breaking down the one-off occasions. What if the roof breaks? What if the water system breaks? What if there is a grid failure and the power now no longer works for us? What if some of the units break down and can't be opened? All these things are CapEx expenses that could cost you $10, $20, $50,000 in the next 12 months. That is also an expense that destroys your cash flow. So even if this property made me $20K a year of net free cash flow, let's say the NOI is 168 for some reason somehow, and we are making a 148 payment. We have $20K a year now of debt cash flow. But if anything breaks, we just lost 10, 20K. Which is also why there's no guaranteed way to get super rich in commercial real estate or any kind of business for that matter, because it is a risk that could happen. More often than not, if you buy correctly, you won't have that issue. But I've seen people, buy properties, not my clients, just for example here, but I've seen somebody that I know said they buy a property and they did inspections and somehow the roof was missed and there was huge, huge fire damage there. And then they had to spend a lot of money to fix it after they bought it. Luckily, they were able to get things in order and fix it and sell for a higher price point and made money still. But for some people, that would be a huge loss to you, which is why it's so important to understand all these numbers here. Because if I'm just looking at those things in that one scenario, we're losing out on a lot of opportunities. Now, for this property, I'm trying to buy, if it's definitely a storage unit, I'm trying to buy an A cap. So if I was to buy this property, I'm okay, let's do $2 million, which is 10,544. 10,544 times 12. That's 126. So now, day one, the NOI would technically make you $23,000 a year in net free cash flow by that one change in negotiating $300,000 off the ask price to $2 million even. Because if I have, let's say, 149 divided by $2 million, that means my cap rate is 7.4, which is still a little low. I probably honestly would want to give this deal for like 1.7, 1.6. Because I can already tell if I come back to this page here. Our CapEx is probably pretty high. Oops. It's probably pretty high. Look at the roads. It's all beat up and broken down. The roof looks pretty beat up. I can tell a lot of deferred maintenance on this property. Over here, looks like there used to be a storage unit at one point in time that was taken down for some reason and moved over here because this is all one lot. I'm pretty sure they own, this place, and this place, which is nice for later on. You can always expand if you wanted to. But I can see there's a lot of room for improvement. Even this power washing, if I don't want to fix it permanently, is a CapEx for us. So when you look at properties like this, just know what expenses you have in place. Because this is why my clients are always winning every single deal. Because we do all the due diligence, all the underwriting. We look at everything, make sure you save not only 5-6 figures when you buy the property with our help, but also you make more money later on because we do the hard work for you guys and gals, helping you make sure the deal is going to be good for you, good returns, and safe as well. But as always, thanks for watching. If you want more support over here, the whole video breaks down the A to Z on investing in commercial real estate, literally all my secrets in one single video for you. Down below, there's a whole playlist for you. It shows you all things commercial real estate. And of course, no obligations. If you want more help and more support down below, link in the description, how to call me directly, and see if we help you save 5 to 6 figures in the next investment or you work for free. And so far, we have 0 people get free services because they make so much more money for our help that all commissions mean nothing to them because they have a huge spread of savings with our support. But always, thank you for watching. Have the best day yet. I'll see you at the top.